I get mad zooted, I got this bad thing I recruit.
I hope everyone's doing well and welcome back to another trade breakdown. So this one actually makes us 7 for 7. It's 7 for 7 for the year, but it's the first official trade of Feb, about 4 days in, or rather only 2 trading days, right? Considering today's Tuesday. But a lot of you guys hopefully would have seen the group chat before you actually come to this video and all the sort of screenshots that I attached explaining, or rather just showing the mentorship chat, right? And in the chat, you guys can see exactly what we anticipated. The first initial message is actually sent at 12:30, right, in the morning. It's me talking with somebody in the group chat about, do we have a bias for tomorrow? Are we leaning to a side? Are we not? And what we'd essentially said was, look, based on this daily closure, if we had to pick a side, it's going to be bearish. Trying to long from something like this, it just doesn't seem wise, right? So that was the initial sort of semi-bias, because it wasn't something we had with a lot of conviction, but it was essentially saying if we had to pick a side, we would definitely be leaning bearish after a close like this, right? And you guys can see even before the close, right, before the candle closed all the way down here, I did have previous monthly high on the chart, just in case the candle closed somewhere up here where it initially opened. And then of course this could have also been a drawn liquidity, but we actually, right, in that candle managed to hit this weekly rejection block, just tap into this wick, and then of course big move away. So cool. Now the expectation for, right, the day was essentially set out, and what happened is the day opened with a gap up and we closed that gap pretty early. So now this 4-hour candle here, this represents London session. You guys can see the candle closed the gap, then traded back into the range. So what I said to everybody was, look, we have previous daily low on the charts, which is this horizontal line over here, right? And again, very similar to the daily bias. If I had to pick a side from this consolidation, I would be picking for us to expand this. Now, again, in the chat, you guys would see, we mentioned, look, the framework was set out as this. There's a lot of markers on my chart, but what I want you guys to pay attention to specifically, right, is this fair value gap. 1 hour fair value gap. We said we want to see price trade into this, displace lower from there, and then we will consider the shorts, right? That's exactly what occurred. New York open, traded into this, bit of displacement away, and then from there absolutely just kicked out. Now we'll get to building the actual framework going into the session. Cool. Let's see. Yeah, so we were just talking about specifically, again, this fair value gap being the sort of pivot point. It's the last bit of displacement. If price respects this, traces this, moves down on the lower time frame, just, you know, it makes the setup very, very easy to read. So cool. Coming to New York, and again, reference to the messages you guys will see, I said to everyone initially, guys, when the candles were printed like this, I know we're in the fair value gap, but I would not count this as displacement. Then specifically, this candle dropped, right, this 5-minute fair value gap. You guys can see about there, 8 a.m. And some people could have possibly just hit it from there, but I think the easier, or rather the trade that will give you a bit of peace of mind, is the one where you get the retracement, price respect this, and trades lower. And now with this setup, what I said to everybody was, look, of course this is not OTE. That might have put some people off, but based on where we're coming from, we're printing displacement away from the 1 hour fair value gap. It's in line with our bias. If price hits this and respects it, then we can just enter here, cover the high, right? This stop loss isn't massive anyways. On EU, it was only about 10 pips, right? That's a pretty standard stop loss, right? So cool. From here, price trades into this, starts displacing away. What I said to everybody is we're waiting for the break of structure, which is this. And given today's context, right, and 2 things in specific, the fact that we had filled the gap and the 4-hour candles were very wicky and traded back into range. I said, you know, very clearly in the message, guys, let's try to get our risk off the table as soon as we can. We'll be very aggressive, but what we want to see is this break of structure, then we will trim the risk, right? we saw this breaker structure, or rather, even before this breaker structure, right, we'd been tapped in around here. You guys can see this following this nice big candle came. And what I said to everybody was, okay, guys, now that this candle is here and it's displacing away, remember this fair value gap that we used for the entry? What we can actually do is trim the stop loss to this. This took off about half the stop loss, right? From there, the stop loss is 120 points. As you can see over here, right? If I cover the high of that fair value gap, goes to about 60, right? On EU, it was a bit different. It was about 40% of the stop loss was gone. We still had 0.6% risk on the table. The second that price created that breaker structure on DXY, I told everyone, okay, guys, let's go break even. So now we're in the trade. We're around about here. There's two outcomes. Either price retraces, takes us out. We absolutely lose zero, right? Nothing bad's going to happen. Or we have these targets for price to play out. And of course, the previous daily low, again, much like our sort of previous trades, we got a bit lucky to an extent. It just gave us a one-way run. I think it's a bit more than luck, but specifically what I wanted to talk about before we get on to, again, diving into our risk management aspect is the entry, right? If you guys see, I referenced very specifically, okay, guys, we've come from the 1 hour fair value gap. We've printed the FVG away. I really like this fair value gap. It's printed at 8 a.m. Let's wait for the 8:30 macro. You know that's a significant time. 8:30 can come in, right? Give us a retracement. Usually kickstart the expansion. And what did 8:30 do? 8:30 on the dot, right? 8:30 candle on the dot actually made the intra-session high, tapping into the fair value gap with the move away, and was not violated. At least on DXY, I believe on EU it was, but not by a lot, by a pip or so, right? 8:30 high was held, and then from there, prices, of course, then traded away. And what we said we wanted to see following that was a 15-minute IO fed. And again, I know there's a lot of markings, so it's not as clear, but it's given the 15-minute IO fed here, 8:30. And of course, when you're coming from IO feds like this, you expect the next candle to expand. Next candle expanded, and then the one after that. So what? That's about maybe half an hour in the trade. Absolutely smashed to the targets. Played out as about 1.8R on DXY. On EU, I believe it was a very flat 2R. Check. Okay. So if we go on to, and in the same sort of area of time, right, 8:30, which is this candle here, where we let the fair value gap get hit. So the position specifically from my side was at the open of this specific fair value gap. Right, just to make it clear, I'll mark it out for you guys. We wanted to see disrespected. You know, we like candles like this sweeping the previous candle, displacement higher. This is a bullish order block, then the expansion. Price retraces into this higher. We also wanted to cover this low. Somebody in the group chat did ask, should we cover this low, right? Which is a 7.5 pip stop loss, or should we cover this? I said to go with this for now. You know, given the context, let's just give the trade a bit of space to move. And if the stop loss is here and price is getting very close, a lot of people might panic, right? Sometimes it's best to just pick the easy option. And if we go on sort of higher time frame for EU, where you guys will see, we had these sort of clustered highs, which were also previous daily high, about there, which is what we were targeting. Come back 5 minute. Very simple, respects the fair value gap, moves in line with the DXY. Same thing from entry 8:30 to TP about 9:05, so about half an hour. The trade, if you taken exactly like this, was 1.8R. I managed to close just as it burst past the target. I think probably somewhere around there, but getting bang on about 2R. And I think that's what most people would have got on average there. And you guys can see even past the price of it really, you know, just continued running. It's ran a total 5R, but it's not something we expected. However, not bad at all. Sets up the daily direction really nicely. I think it's a bit clearer on the DXY. If the candle closes very solid and nice like this, I would anticipate the next day's trade lower. But anyways, back to the setup just quickly. One thing I wanted to say. when we have the chance for it, if I'm seeing this candle printed, and this candle is very solid and blocky, bigger than the other candles, very likely from a fair value gap. This makes me very confident in saying, okay, look, this candle has printed. It's likely we are going to expand this way now, right? We're going to go in the right direction. So let me trim my stop loss very quick. That was the half trim of the stop loss, right? The break of structure, breaking this low and also breaking it with a solid body rather than just a wick, was a confirmation of going break even. Why? Because now that you now have a new range to play with, we had a new swing point from this 15-minute IO fed, right? It's not as clean on the 5-minute, but if you look at the 15-minute specifically, you create that 3-bar swing inside the fair value. You expect this now to hold, right? However, we essentially cover this or just go break even, because if price even comes near that break even entry, it's probably taking that high, right? What's the likelihood that price will get this close and not take that high? That's simply why we do it. But yeah, guys, I think that was a very, very simple trade. It wasn't necessarily a hard read. It was just about patience. We had the framework. We knew, look, we know it's a bit undecided, so let's be sure. Let's make sure we're seeing the right displacement. But the second price gave us that kick down, right? The second we saw price print that fair value gap, we were alerted. You can look at the timestamps on the messages, right? You guys will see I literally said to everybody 12:35, so that's going to be about 7:35 here, right? So on this candle, I said to everyone, look, guys, I know you're seeing this move down, but this is not displacement. So nobody be tempted yet. Just wait till we see fair value gaps printed. The second we see this candle print, 8 a.m, around 110, I said, okay, this looks better. Focus on this fair value gap, wait for the 130 macro. But that macro, if you guys go and back test it, is known to retrace or provide these sort of IO fed or sweep of the previous candle entries. It's very quick moves, creating a sort of intra-session high, and then it goes one way. It just delivers to the lows. And of course here, you could have been very conservative with your target, stuck to this, but I think it was just very obvious previous daily high was going to get hit out with just a nice round target. And of course, it landed up very well with EU as well. So yeah, that was really and truly pretty much it. Now, we know that this week, still continuing on with all the Trump news, might be a bit difficult, right? We might not be clear on bias. However, we've secured 2R for the week, which is a great result. So we don't need to be too intent on trying to catch more setups. And we have NFP this Friday. So, you know, maybe it's a good idea to be patient here. However, like I said to you guys, if the candle closes anything like this, I'm anticipating lower prices on the DXY. I want to see it run out all of this sell side liquidity back to this wick and lower than here, right? So if an opportunity is offered to us again tomorrow, we'll be back again at the same time. But yeah, guys, hope all of that made sense. As usual, any questions at all, just drop the message below or just drop me a message on Telegram. I'll get back to all